Welcome everyone, this is James the Finance Guy. Today we're doing episode 4 of my series on what is investing, and today it is funds. So to recap, you're the investor, you've got an advisor telling you what to do with your spare money. Your advisor has decided which structures we're going to do in order to get to your goals. Lastly, we have to decide which funds to invest in order to achieve those goals. What are funds? Let's get into it. You need to grow your money, and effectively worldwide there are only 4 things that you can invest in order to grow your money: cash, bonds, property, equity. Those are the 4 major asset classes. Pretty self-explanatory. Cash, it's like money at the bank. Bonds, it's basically debt, so borrowing money. Property is physical house or mall, and equity is shares in companies. So think of a company, somebody has shares in it. If you buy some of those shares, you can get some of that growth too. There are different ways you can acquire these 4 asset classes in order to start getting some of the returns that they generate. The first method is to physically go and buy these things. Property is pretty straightforward. A house, for example. Bonds would be maybe government retail bonds. So you can get those at the post office. Basically a certificate where the government promises to pay you a certain amount of interest because you've borrowed them some money. You normally get that in the form of a coupon, so a little letter in the mail with your interest. Cash, it's like money at the bank. Banks hold most of people's money. You could put it under a mattress, but let's draw a bank rather. And equity are shares in a company. Most of the time, if you buy a share in a company, you'll get a share certificate. One step easier than going out to physically buy these things, you can go to a marketplace where there are lots of people buying and selling them, and you can offer a price for one of these and potentially acquire it. For example, in the case of equities, like the New York Stock Exchange, London Stock Exchange. Bonds, there's also a place where they're listed on the bond exchange. And cash, you can basically have a look at what the different banks are offering. So a marketplace looks a little bit something like this. You have company X, Y, Z, and on this side all the buyers get together, and on this side the sellers list what they want to sell. As soon as a buyer and a seller agree on the same price, a trade happens, and then you've acquired your asset. Good job. That's a market. That's an asset class. Now we start getting really clever by utilizing a fund. Alright, a fund is basically a group of people that have come together, maybe a couple thousand, a couple hundred at least, and what these guys are doing very cleverly is they are pooling their money together into a fund. With that collective buying power, they are able to acquire these asset classes in their fund. So let's buy some shares in a company, let's buy some property, let's buy some bonds, and some cash. Alright, so the advantage here is that with their scale, they can actually buy assets that they otherwise wouldn't have been able to buy as an individual. Collectively they now can, which brings down the costs, makes it a lot easier. How this fund then practically works, is that it is divided up into units. And this individual investor has contributed a certain percentage of all the cash that was used to acquire this fund. And that investor, say, has 5 units in the fund. Now, what happens when these asset classes start performing and start delivering returns? Each one of these units performs and gives the same return as the fund collectively. So you, with a little bit of money, can get access to a combination of asset classes that you otherwise wouldn't have with your small amount of cash. Your investment in an asset class can be purchased at a marketplace, and a fund can buy things in that marketplace to put into a collective investment scheme, otherwise also referred to as a unit trust, a fund. So let's delve a little bit deeper into types of funds and how they are managed. Okay, so let's redraw our fund here at the top. So there are a number of different types of funds out there, and I'm going to sort of just do an overall view of the different categories, styles, and all that. One way you can categorize a fund is how either conservative or aggressive it is. Conservative meaning nice and stable, predictable growth. Aggressive meaning speculative, highly volatile, could go up and down, but long term should do quite well. Okay, so conservative, balanced, or aggressive. Another way to categorize a fund is by a specific type of asset class. So maybe there's a fund that only invests in equities, then it'll be an equity unit trust, for example. So you can have specific unit trusts. You can have a fund that invests inside another fund. That's called a feeder fund. Or you could have a fund that invests in a combination of other funds. That's called a fund of funds. Exciting stuff, right? And then lastly, you can get different domiciled or currency-based funds. For example, rands, USD, pounds. And those are just some of the ways that you can categorize unit trusts, funds, collective investment schemes. So, very interesting. I understand the technology, all the theory and the logic behind it, but how do I actually find these unit trusts? How do I invest in them and who runs them? Generally, a fund is run by a specific asset manager, and in no particular order. Some examples on the local side would be Allen Gray, Coronation, Investec, and PSG. On the offshore side, the likes of Goldman Sachs, Franklin Templeton, Schroders, and Fundsmith. All of these guys have these funds that they run, and in order to help the investors and the advisors decide how the funds work, what the category of funds are, and how they've been performing, every single fund that is registered has something called a fund fact sheet. Very important concept. And now I'm going to explain to you how a basic fund fact sheet is constructed so that you can make a good decision on the funds that you want to invest in, or when your advisor shows you a fund fact sheet, you know what's potting. We've pretty much covered everything now. What is investing? Got to the last bit. What I'm going to do in the next video, put it all together, give you a nice practical example so you can figure out how to apply the concepts I've taught you. So like the video, subscribe to the video, get the notifications for the subscription, and leave a comment.